Hey everybody. Took a chance to come to Mexico with my family. We're on vacation here, but wanted to do a video on a question that's coming up quite a bit, and that's about vehicle deductions. And that becomes more common as we get to the end of the year and people are looking at buying a vehicle or doing something with vehicle to help save money on taxes before the end of the year. So I thought I'd go through those real quick. So first off, when you're looking at vehicle deductions, you have to keep a mileage log, because a mileage log will determine how much business use you have in that vehicle. So if you keep your mileage log, let's say you drive 10,000 miles during the year and 70 or 7,000 are for business, you are using that vehicle 70% for business, which means that 70% of the expenses of that vehicle can be written off. So that applies whether you're doing a lease, whether you're buying it, whether you're taking your actual deductions, or whether you're taking a mileage expense. 70% of that vehicle is now used for business. And that's what the IRS uses to determine your business use and how much you can write off for business. If you don't keep a mileage log, it's really hard to document how much you're using for business. So as an example, let's say that you just say that you use the vehicle 100% for business. Well, the IRS is going to want some kind of proof that you're using that 100%, unless it's like a dump truck or a tow truck or something that is obviously not being able to be used for personal use, personal purposes. That you're using that 100% for business is obvious to the IRS. So other than that, the IRS is going to want to see those mileage logs. So once you keep the mileage log and you can say, okay, I use this vehicle 70% for business, at that point you can then, let's say you lease the vehicle, so you can write off 70% of your lease expense, your lease payments, as a business expense. You can write off 70% of any maintenance that you have on that vehicle. Say you put tires on it or oil change. You can write off that. If it's gas that you're putting in it, you write off 70% of that. And that's the lease side. So let's say that you instead purchase the vehicle. So when you purchase the vehicle, and again, you're using it 70% for business, you can write off 70% of the depreciation for business. So you depreciate that vehicle using depreciation logs, and bonus depreciation applies, and all sorts of things like that you can apply to it, but you use 70%. And if you depreciate a vehicle, if you use the actual expenses, you can also add in the vehicle maintenance expenses, such as the gas that you buy for it, the oil changes, the tires, things like that are all 70%. You can write off that way. Let's say that you just use the standard mileage method. So if you use that vehicle 70% for business, then 70% of the miles would be for business use. So again, going back to the original example, if you drive a car 10,000 miles and 7,000 are for business, you take that 7,000 miles that you use for business, times it by the mileage rate that's in effect for that given year, and that would be your vehicle deduction, your vehicle expenses for that year. So again, just to kind of recap, keep a mileage log. Your business use of that mileage log is what is deductible for business purposes. If you lease the vehicle, then the deductible part of those lease payments are based on your business use of that vehicle. If you take depreciation, then again, the business use is based on the mileage, your business use of that vehicle. And then, of course, if you take mileage, that's all based on mileage as well. So those are the ways that to deduct your vehicle expenses for business.